Today, maybe housing bubbles are decreasing, or maybe not. Hello again, it's Martin North from Digital Finance Analytics Web, that is post covering on finance and property news. Well, recently, the global risk of housing bubbles has significantly decreased in 2023, with only Zurich and Tokyo remaining in bubble risk categories, at least according to the UBS Global Real Estate Bubble Index, which was released last week for 2023. This marks a notable reduction from the previous year when 9 cities were classified in the category. The report surveyed 25 cities and found that rising interest rates and global inflation over the past 2 years had led to a sharp decline in real estate market imbalances. Inflation-adjusted international home price indices experienced their sharpest decrease since the 2008 global financial crisis, and that was attributed to the end of cheap financing in the real estate sector. Cities such as Tel Aviv, Hong Kong, Frankfurt and Toronto, known for their high housing prices, have exited bubble territory and are now merely classified as overpriced. Zurich leads the real estate bubble index with a score of 1.71, followed by Tokyo, a 1.65, Miami, Munich and Frankfurt occupy the 3rd to 5th positions. In contrast to other cities where bubble risk decreased substantially, Miami remained the highest ranked US city in 2023 with a score of 1.38, just 0.13 index points below bubble risk territory. The city's housing prices have continued to increase above the US average due to its comparatively low income to house price levels and population influx in the US Sunbelt. Despite this overall decrease in bubble risk, affordability issues persist in many cities. For instance, London's housing market remains under pressure as local affordability is at its worst since 2007 due to high mortgage rates, and in Paris, house prices continue to decline among diminishing affordability, lending restrictions and a property tax hike. And moreover, real house prices in Zurich continue to rise in 2023, albeit at a slower pace than previous years, while rental growth has accelerated sharply. And in Germany, despite strong growth over the past decade, rate hikes and high inflation triggered a revaluation of almost 20% in Frankfurt and 15% in Munich. However, UBS predicts that the seeds for the next property price boom has already been sowed in some cities. Hybrid working has not weakened demand for city living in a sustained manner, and the housing shortage is likely to intensify as fewer building permits have been issued recently, especially in European urban centres. And whilst they don't mention it specifically, we would highlight also high migration, putting significant upward demand pressure in many countries, including, of course, Australia, as we've discussed recently. So, the next bubble for housing could well be already in the works. We will see. I think it actually comes back to what happens with interest rates. And as I've said recently, higher for longer seems to be the mantra there. So that will pull in opposition to higher house prices. But in absolute terms, many house prices are still way too high relative to incomes. So whilst the bubble territory might have shifted down a little bit, certainly in Australia, I think we're still in the middle of one. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. North from Digital Finance Analytics, many thanks for watching, and I'll see you again next time.